Hello, my name is Kevin Yudha Pratama. I'm from the School of Business and Management of Bandung Institut of Technology, and I will be presenting about how can central bank digital currency influence the economic activity of Indonesia. So, the presentation content will include an introduction, literature review, methodology, findings, and conclusion. First up is the introduction. Money, an intangible concept representing value, is distinct from currency, its tangible medium. Initially, involved bartering, which evolved into using currency, including paper and coins. This evolution marks a significant advancement for national economies. The spread of money concepts globally led to the international currency market, significantly affecting global livelihoods and making money acquisition central to human needs. With technological advancements, money evolved into e-money. Indonesia saw a 34.28% increase in e-money circulation, reaching 772.5 million units by November 2022. Central bank digital currency (CBDC) emerging as a key trend can offer better control and regulation of currency. Implementing CBDCs in Indonesia could enhance economic growth and financial inclusivity by addressing the digital divide. Next is the problem statement. In the growing age of digitalization, there still exists a large portion of the Indonesian population that has no access to digital financial services. The Indonesian government acknowledges this problem and must face the challenge of addressing these gaps of access. Next is the research question. So, the first one is, how does introducing central bank digital currency impact the financial economic activities of Indonesia? Second, what are the prospects of central bank digital currency as a replacement of cash? Third, in what ways can Indonesia implement the central bank digital currency to improve the nation's financial inclusion? And for the research objectives, the first one is to analyze how introducing central bank digital currency may impact the economic activity and performance of Indonesia, to explore and analyze the idea of replacing cash with central bank digital currency, and to examine ways how Indonesia can efficiently implement central bank digital currency to its financial system and improve its financial inclusion. Now, we will talk about the literature review, with the first point being digital money. Digital money is a payment that is done digitally, and the types of digital money include central bank digital currency, cryptocurrencies, and stablecoin. Digital money offers advantages like instant transaction, reduced risk of crime, and improved access to economic welfare. However, digital money is also subject to challenges of privacy risk, potential for internet fraud, as well as money laundering. The second point of the literature review is the central bank digital currency in itself. It is a new form of currency that is issued by the central bank. CBDCs is aiming to replicate cash accessibility, low transaction costs, and user privacy, while also extending financial services to the unbanked population. Developing nations, including Indonesia, are leading the CBDC experimentation in order to enhance financial inclusion within the country. In general, a digital rupiah could significantly boost the financial inclusion levels for Indonesia's unbanked population. Next up is financial inclusion. It is a concept that explains the importance of ensuring individuals, households, and businesses have access to financial services. Financial inclusion is crucial as it correlates to economic growth by reducing poverty, enabling access to loans and insurance for the people, as well as fostering innovation and job creation. As for financial inclusion, we can continue, is that in Indonesia, financial inclusion still remains a significant challenge. The barriers as to why there seems to be a financial inclusion problem is the problem of insufficient documentation, as well as the geographical distance from financial services. Despite the rise of digital transactions, Indonesia's financial system still requires further innovation to achieve a better level of financial inclusion. Next is monetary policy. It is a process that involves central banks adjusting the money supply to stabilize inflation and monetary output. This may in turn affect employment and the spending of the people. In Indonesia, Bank Indonesia manages the monetary policy, aiming for low inflation, sustainable balance of payments, and also high economic growth. Next is financial stability. It is the process that ensures efficient resource allocation within the financial markets, the proper risk management, and stable employment and price levels. Instability in a financial market in itself can lead to banking disruptions, inflation, and stock market crashes. CBDCs, by providing a safer asset and improving liquidity management, can enhance financial stability. However, it can also pose risks such as vulnerability to bank runs and reduce bank credit extensions during period of financial stress. The methodology of this research in itself will use a qualitative data research, where consultation with key stakeholder and an interview will be done with them. The analysis by correlating findings from literature review and consultation with key stakeholder to the topic of research will be the main point of the data in analysis. Now, we will talk about the findings, where the first point is financial stability in a modern monetary system. We'll first talk about the effect of interest-bearing CBDCs. Interest-bearing CBDCs can influence commercial banks' deposit and loans. Next is the effect of bank rate adjustments. Higher CBDC interest rates may force banks to offer more attractive rates to retain customers. Next is the risk of digital bank runs, where depositors move funds to CBDC accounts during financial stress, which can destabilize the financial systems. Now, to combat this, careful policy planning is crucial, where CBDC risk management must be done to ensure financial stability. Now, how is this relevant to Indonesia? Indonesian policymakers must create strategies to mitigate the large-scale bank runs and carefully plan CBDC implementation to fully utilize the potential of CBDCs and help the people to fully utilize this technology. The second point is the banking crisis under central bank digital currency. We'll first talk about the unique characteristics of CBDC. CBDCs in itself have no default risk, are interest-bearing, and can serve as a medium of exchange. We will then talk about the policy scenarios that are possible for CBDCs. The first one being loans to banks, or LOB for short. It enhances bank liquidity and reduces bank runs risk during financial stress. And the second policy scenario is corporate asset purchases, or CAP. It stabilizes capital prices and provides a buffer against capital flight during crises. We will be then talking about CBDC impact on bank net worth. CBDCs might reduce banks' net worth during normal times by competing with deposits. And then we will talk about enhanced financial stability. In crises, CBDCs enhance financial stability by providing a reliable alternative to bank deposits and supporting the central bank's role as a lender of last resort. So how is this relevant to Indonesia? Well, this finding emphasizes the need for careful deliberation in regard to CBDC, as it is very important for the Indonesian policymakers to retain banking stability. And to retain this banking stability, the Indonesian government may adopt certain policies such as the loans to banks and corporate asset purchases. We will now then talk about the simple model of central bank digital currency, where the key insights include greater transaction efficiency with CBDCs, potential for CBDCs to bear interest, reduced tax evasion through traceable accounts with the usage of CBDCs, enhanced financial stability with CBDC, as it is a safer asset compared to commercial bank deposits. Now, the policy implications of these findings is that facilitation of negative interest rates during inflation, boost money supply through helicopter drops, structuring CBDCs to prevent capital flights. And we will then be talking about how cash and CBDCs have unique and distinct roles in the usage of the people, and central banks must have a balance in the usage of both of these forms of currencies. The design and implementation, proper CBDC design can enhance monetary policy and financial stability, while cash remains essential for privacy and utility. What this was talking about is the design of the usage of both of the currencies and how both the currency complement each other in its usage. Next, we'll be talking about banking crisis under central bank digital currency. And the first thing that we'll be talking about is first, it is important to know the opportunities of CBDC. With CBDC, it can increase the transaction efficiency, enhance financial inclusion, it can mitigate risk, improve monetary and fiscal sovereignty, and it can be an accurate economic activity measurement for the government, where they can measure all of the financial activity that is done through CBDCs. Now we will be talking about the risk of CBDCs, and the first risk is the potential for bank runs, and the next is technical and security risks. Next is the legal and supervision challenges that comes with the implementation, And next, the issues related to digital infrastructure and financial exclusion. Additionally, from these findings, we can see that in Asia, there are already certain developments regarding CBDCs. There's the eCNY in China, Project Bakong in Cambodia, Project Ubin in Singapore, Project eHKD in Hong Kong, as well as in Indonesia that is currently in progress. Now, we'll be talking about the interview that I did with Mr. Donanto Wibowo, the director of Indonesia Central Bank. The key takeaways from this interview is that, the first point is the CBDC implementation models. Indonesia is considering both wholesale and retail models to complement each other. As for the challenges regarding CBDCs and its connection to education, it is very important to increase digital literacy, and it is, as of now, a challenge. Financial literacy and education are crucial for preventing future problems and optimizing digitalization. As for the integration with existing systems, CBDC is believed to be complementing the conventional currency, and it won't replace cash payments or cause confusion with other digital currency, and it will work in tandem with them. As for the control and accessibility, there are already plans in place in regards to the technical, regulatory, and behavioral aspects of CBDCs. However, while all of this segment is still being developed, the Indonesian Central Bank is still keeping it low key to not cause confusion and manage the potential noise in regards to the public knowing this and causing confusion. So we'll now be talking about the conclusion of this presentation and research. The key insights is that CBDC will affect monetary policy and banking infrastructure, especially interest rates on commercial deposits. However, proper implementation can prevent digital bank runs and enhance financial access to underserved populations. This will in turn increase financial inclusivity, which will help grow the economy and improve the livelihood of the underserved populations. CBDC will work together with other forms of currency to best serve the population. Now, we'll be talking about the central bank actions. It has to actively research CBDC models. It must address technical, regulatory, and behavioral challenges that comes with the implementation. And it has to emphasize the importance of digital literacy and education to the public. That is all from me. Thank you.